If you want to make more money, most people will tell you to go and ask your boss for a raise, which a 4% raise for most people is just fine. But if you really want to make more money, more than this 4% raise, I want you to understand something even deeper. Take a look. We're all taught that if you want to make more money, you got to work hard at your job. That way you can graduate from being an associate to a manager, where you'll make more money. From a manager to a director, where you'll make even more money. From a director to a VP, where you'll make even more money. And then from a VP, maybe to a CEO, that way you can make even more money. This is called climbing the corporate ladder. And what you're doing here is you are working hard at your job to make more money. Now again, there's nothing wrong with this. However, this is just one way that you can make money in our entire economic system. And there's more than one way to make money in our economic system. And there are some ways that will allow you to earn more money while working less, which I also want you to understand. In fact, there are 3 different ways that you can earn money in our economic system. Now, to understand what the 3 ways are, I want to briefly remind you how our economic system works. That way you understand the 3 different ways that you can actually earn money. Because in our economic system, there are 3 main players. You have consumers, which is everybody. Rich people, middle class people, poor people. Everybody is a consumer because everybody needs to eat and everybody needs clothes. Consumers go and spend money at businesses. You go to Chipotle, you buy the bowl and the extra guac, the money goes to Chipotle, and the person that benefits when you spend money at Chipotle is, of course, the investors in the Chipotle company, because the more money you spend at Chipotle, the bigger the profits that Chipotle gets. And when Chipotle makes bigger profits, well, the stock becomes more valuable. They can pay out bigger dividends, and that benefits the investors, the owners in Chipotle. This is how our economic system works. But the question here is, how do these consumers get the money? What we just talked about is climbing the corporate ladder, but that's just one way that you can earn money. The way that you earn money there is by being a worker in our economic system. So let's dive a little bit deeper into the 3 ways that you can earn money in our economic system. If you want to go out and buy yourself the extra guac, you need the money to be able to do that. Now the question is, how can you get the money to buy the extra guac? And in our economic system, there are 3 ways that you can get paid. Number 1 is about being a worker. You can work in a company and get paid a paycheck. That's one way that you can get paid. Number 2 is you can be a creator. This is now going out and starting a company. There's a second way you can get paid. And the third way you can get paid is you can be an investor. You can invest your money into something, and if your investment goes up in value and you sell it, or if you get paid some sort of dividend or royalty, that's the third way that you can get paid. See, when now people talk about how do you earn more money, they're always focused on this. They're focused on how can you increase your income as a worker? How can you get a promotion? How can you get a raise? How you can get a bonus? Which isn't necessarily a bad thing. But there are other ways that you can also work to earn more money in addition to this that don't necessarily require a whole lot of time on your part. Because what you want to understand here is when you are trying to get paid as a worker, what you're doing is you are investing your time. When you're trying to be a creator, when you're trying to create a business, now you're investing your time and your money. When you're trying to create income by being an investor, now you're investing your money. And what you'll see and learn pretty quickly is that there's a limit to how much time you can invest. There's a limit to how many hours that you can work at your job. If you're getting paid hourly, there's a limit to how many hours that you can work, even if you're working salary. There's a limit to how much money you can make because there's a limit of how much time that you can invest. But there's no limit to how much money you can invest. And you might say, well, I'm limited by how much money I have. Sure, but your money doesn't need a break. Your money doesn't need to take a vacation. Your money doesn't need to sleep, but you do. So your money can keep earning money even when you're not working. And this is where now, if you can understand this and you can figure out how you can find a way to make money even if it's not through your own time, now you can really maximize how much money you're going to earn. Now I'm not going to go too deep into the actual investing side of things in this video, although I should let you know that on April 2nd, 2024, I'm hosting a live and free real estate investing workshop at 8 p.m. Eastern Time, where I'm going to be going over how I invest my money in real estate. I'll be sharing my own strategies of how do I find a good location, a good neighborhood to invest in, how do I build a real estate team, what are the questions that I ask, how do I actually find a good property, how do I run the numbers and make sure this property makes sense financially, how is this property going to make money, and then I'll go over how to maximize your profits as a real estate investor. This workshop is completely free. All you have to do is register. So if you'd like to join me on this free real estate investing workshop on April 2nd, yes, this is live. You need to register. I got the link for you down in the description below. And if you're interested in doing this, make sure you register sooner rather than later, because there's a limited number of people that can actually join live. Now, the first thing that I want to make explicitly clear is that there's nothing wrong with earning your money by being a worker. But there is a limit to how much money you can earn as a worker. For example, Steph Curry makes hundreds of millions of dollars by being a worker. However, because he's getting his money as a worker, because he's a W-2 employee, he's also got to pay the highest taxes. As an attorney who's not your attorney, I can tell you that when you make money as a W-2 employee, you are subject to the highest tax rates and the lowest tax breaks. And so now when you make a lot of money, like Steph Curry does, well now half of your money, if not a little bit more, is going to go to taxes. So when you hear Steph Curry is making $200 million from his salary as an employee playing basketball, well, $100 million of that is going to go straight to taxes because, well, when you make money as an employee, you got to pay those ordinary tax rates that you pay as an employee. But when you compare that to somebody like, say, Michael Jordan, who's now making hundreds of millions of dollars a year through his business partnerships, well, now he's making this money without having to play basketball. And now when Michael Jordan makes these hundreds of millions of dollars through his business partnerships, he has the opportunity to qualify for different tax write-offs and different tax deductions that you don't get as an employee. So sure, you can make a lot of money as a worker. When you're the CEO of a company, you're working in the company and you got to pay the highest tax rates because, well, the ordinary tax rates you pay as an employee are the highest tax rates that you have to pay. But when you move to being a creator or an investor, now you can start qualifying for different types of tax benefits as well. Now this video is not about taxes, but rather to understand the different ways that you can get paid, because I want you to understand that if you just rely on your salary as a worker, you're never going to be able to be financially free. Even if you take a look at somebody making a lot of money like Steph Curry, if Steph Curry were to stop playing basketball today and no more income would coming in, well now he has all of his expenses to pay. Maybe he has a paid off home, maybe he has a paid off car, maybe he has some paid off stuff, but he still needs to eat. And if you run out of all the money that you have in the bank account, well now you have no income coming in and you still have expenses to pay. This is why, if you want to be financially free, if you ever want to be wealthy, you cannot solely rely on your income here as a worker. I don't care how much money you're making. I don't care if you're a doctor. I don't care if you're a CEO. I don't care if you're an NBA player. You cannot solely rely on this income because eventually this income's going to stop. Either you're going to get too old and you don't want to work anymore, or you're gonna not want to work anymore, or maybe something happens to you. Maybe you break your leg, maybe you can't go into work. Maybe you wanna take some time off because you had a kid. Maybe you wanna take a vacation. If you're not working and you don't get paid, you still wanna have money coming in, which means you don't wanna constantly and only rely on your time in order to get paid. You don't wanna only rely on your labor. Now the reason why this matters is because we live in what's called a capitalist system. Now this word capitalist system makes a lot of people very emotionally charged, angry, happy. It doesn't really matter. It makes people very politically and emotionally charged. What I want you to understand about a capitalist system is that there's a couple ways that you can get paid. You can get paid from your labor, your time, and you can also get paid from your capital, which is what a capitalist system is all about. Now, in this capitalist system, the ways that you can make the most money is when you involve your capital, meaning when you involve your money. And so now, when you hear about some of the wealthiest people in the world, what do? Well, they're investors, people like Warren Buffett, or the people that started a company, people like Jeff Bezos. Now, what did these people do? Well, people who created a company invested their time and their money, and people that just invested their money, well, now they're investors. And now what you're being rewarded for is your compensation of risk. Because now when you are just a worker in a company, what you're risking is your time. And you might say, well, I'm also risking my money because if I don't get paid because the company goes bankrupt, I'm still risking my money. Well, if you're working inside of a company, you shouldn't be going in and investing your money back into the company. Like if you get a job somewhere and they're charging you money to work there, that's a problem. That's a scam. But if you're investing in a company, they're going to charge you money to get some ownership in that company because now you are investing in that company. And now when you risk your money, you get the benefit of the upside in the profits. And so this is where now what you need to understand is, well, you don't have to be an entrepreneur, but you have to at the very least be an investor. And let me show you why this is so important. So I am the founder and CEO of a company called Briefs Media, which means I am a creator in this company. And the way that it works is I started this company with my own time, and I also started this money with my own money. We didn't go out and raise any debt. We didn't go out and raise any investment money. It was funded by me. And now the way it works, let's just run some hypothetical numbers. Let's assume that Briefs Media makes $1 million in revenue. And then we have expenses we need to pay. Let's assume that we have, I don't know, $500,000 in expenses, whether it be our office expenses, salary expenses, marketing expenses, software expenses. We have a lot of expenses. So if we have $500,000 of expenses, that means we have $500,000 left in the bank account. But I still want to pay myself because remember, I'm also the CEO in the company. I'm working as an employee in the company, so I should pay myself a salary. And if I pay myself, let's just say $100,000 salary, that means now I pay myself $100,000, which goes into my bank account, and we're just going to ignore the payroll taxes for the simplicity of this video. That means now the bank account is going to be left with $400,000 of profit. Yes, I made $100,000 as an employee, but now the business, this Briefs Media business, still has $400,000 left in the business. Who gets the profit in the business? Well, the profits go to the owners of the company. And in this instance, because I created the company and I didn't have any outside investors, I am the owner of this company, which means I get to control the profits. Now, I could go out and sell a piece of the company to somebody else, and now they get the piece of the ownership, but I haven't done that. So now if I'm the owner of the company, I get to decide what to do with the profits. I could take this $400,000 and go out and buy a car. I could take this $400,000 and go on a nice vacation. I could take this $400,000 and save it for an emergency in the company, or I could take this $400,000 and reinvest it back into the company. That way we can grow even bigger, faster. But this is where now understanding that when you are being that creator or when you're an investor, what you're getting access to is not this. You're not getting access to the salaries, right? The salaries are going to the workers. What you're getting access to when you are an investor or a creator is your piece of this, the profits. Now, the profits happen only after you pay your expenses. If you're an investor in a company and you're trying to get a dividend, or if you're creating a company, these profits really only happen if the company's making money. So it's a risk because this company could not make any money this year. This company could go bankrupt, and every dollar that I invested into it goes to zero. But as a reward for your risk, you're getting a piece of the profits. Now, if you were to come in and buy 25% of the company, you get access to $100,000. A quarter of the profits. And the nice thing for you is if you buy 25% of the company and next year the company makes $4 million in profits, well, now you just saw your profits 10x without really any additional work by you, because the work that you put in was investing your capital. You invested your money. So there's no limit now to how much money you can earn versus when you're working a job. There's a lot more limitations on how much you can earn. Sure, some companies can offer much bigger promotions, much bigger bonuses than others, but there's generally kind of caps on how much you're going to be able to see your income grow. Versus when you are an investor or a creator, now there's no limit to how much money is going to be able to grow because now you are investing your money, you're investing your capital. You can see your money grow exponentially as an investor, but you're not going to see your income grow exponentially as a worker. That's the way that our capitalist system works. Now again, you can hate this, you can love this. What I want you to understand is how to win in this system. That's what my education is all about. So this is where now you got to understand, do you want to be the person that is the entrepreneur, the creator, or do you want to be the person that's an investor? Now you don't have to necessarily just pick one. Like I invest into Briefs Media, but I'm also investing my money into real estate. I'm also investing my money into stocks. I'm also investing my money into some other speculative assets. But this is where now what you have to understand is, what is your way to win in this economic system? Because if you are just a worker, you are never going to be able to be financially free, even if you're Steph Curry. Because eventually, if you keep spending the money, it will go down to zero. If you don't keep working, if you don't keep playing basketball, your money stops coming in. So now, if you're trying to think about what is your financial freedom plan, how are you going to make money without you having to work? The question is now, are you going to do this or are you going to do this? Or are you going to do both? Now, I'm not going to go into how to start a business in this video because there's a lot of work required in that. But every single person in America can be and should be an investor. But the question here is, how do you actually do it? Because if we get a little bit more technical, there's actually two ways that you can invest your money as an investor. You can invest your money as an investor for equity, we'll call that E, or you can invest your money as an investor in the form of debt. We'll call that D. Now, equity and debt are two different ways that you can invest your money with two kind of different results. When you invest your money for equity, now what you're doing is you're investing in ownership in an asset. If you invest in real estate and you go out and buy a property, you're buying ownership in that property. This is what I'll be focusing on my real estate workshop. If you go out and invest in debt, now what you're doing is you're lending money to somebody to go out and invest in real estate. You're giving somebody a mortgage or a loan so that way they can go out and invest in real estate. Now you don't get ownership, you're getting your interest payments. So now, if you go out and lend somebody $100,000 to go out and buy a property and they can 10x their money, well, it doesn't really mean anything to you because all you're gonna get is your 7% interest payments. Whatever contract you agree to, if you agree to a 7% interest rate, that's the maximum you're gonna get. But on the flip side, if you lend somebody $100,000 and then the property goes down, well, you're still gonna get your 7% because you were entitled to the 7%. And even if they sell that property, they have to give you your interest before they can walk away with a penny. Now, sure, can they declare bankruptcy? Can they go into foreclosure? Yes, but you are the first person to get paid before the investors who invested for equity when you invest for debt, because the debt holders got to get paid before the equity holders. So what that means is now if something goes wrong, you're going to get paid as a debt holder, somebody who lent money, before somebody who's waiting for the profits, because you don't have any profits if you have to pay off your debt. Now, this doesn't have to just be in real estate. It's the same thing in the stock market. Now, you can go and invest in companies, or you can also lend money to companies. I've talked about how you can invest in companies on the stock market numerous times on this channel, so you can watch those videos. But another thing that you can do is you can also lend money to those same companies on the stock market. For example, at the time I'm recording this video, Goldman Sachs is issuing corporate bonds, and according to the SEC website, Goldman Sachs is paying out 5.625% interest if you lend money to Goldman Sachs. Now, you might be wondering, well, how does this work? This is called a bond. B-O-N-D. And no, we're not talking about James Bond, we're talking about debt. One of the most common types of bond you might have heard is treasury bonds. That's when you lend money to the government. I've talked about treasury bonds quite a bit. But another way that you can invest money is by giving your money to corporations or other entities in the form of debt. Now what you're doing is you're giving these companies money in exchange for interest. Now you don't have any equity, you don't have any profit share in the company. What you're doing is you're investing for the interest. Again, it's just an alternative way for you to invest your money. And are there risks? Absolutely. Because if Goldman Sachs goes bankrupt, you're not going to get your interest. But the whole idea here is there are multiple ways for you to invest your money. It's not just keeping your money in the bank, it's you can lend your money to the bank. It's not just keeping your money in the bank or lending your money to the bank, you can also own a piece of the bank. The key here is when you start making money, because most people start making money as a worker, you don't want to always just be a worker. Again, nothing wrong with being a worker, but that's not your retirement plan. That's not your financial freedom plan. I don't care how much money you're making as a worker. You're gonna have to start taking some of this money and put it here or put it here. That way you can grow your wealth. That way your wealth can grow without your actual time by itself. Because there's a limit to how much work that you can do, but there's no limit to how much work your money can do. And when you can do this, when you can get to the mindset of not needing to spend money to show it off on Instagram, not needing to go out and eat out just to post it on wherever you want to post it, not needing to go on vacations, not needing to have all the nice fancy designer stuff, well, now you're going to buy yourself a whole lot of freedom. Because now you can work to earn money to make yourself wealthy.